Hello and welcome. My name is David Appelstein and I'm a retirement educator with Wells Fargo. Today's presentation will cover many things, including what to expect in the days and weeks ahead as your Grey Wolf Retirement Savings Plan merges into the DBM Global Incorporated 401k retirement plan at Wells Fargo Institutional Retirement and Trust. I will discuss the transition of the Grey Wolf plan and all the great things the DBM plan has to offer and how the plan can help you reach a better retirement. Today I'm going to cover the transition of your Grey Wolf Retirement Savings Plan, your DBM Global 401k plan features, your investment options, and how to take action today. Let's start by talking about the transition of your Grey Wolf plan to Wells Fargo Institutional Retirement and Trust. You might be wondering why the Grey Wolf plan is merging into the DBM plan. When Grey Wolf was acquired by DBM Global, it became part of what's called a controlled group. The structure and demographics of this controlled group require that a single retirement plan be maintained in order to pass necessary IRS and Department of Labor compliance tests. Wells Fargo is working closely with Fidelity to make a seamless transfer of the Grey Wolf plan, data, and investments. During this time, you cannot access or make changes to your Grey Wolf account, but your retirement savings are still invested. Your current investments in your Grey Wolf plan account will be mapped to similar investments in the DBM plan. If you're currently contributing to the DBM plan, those contributions will continue and will not be impacted by the Grey Wolf plan merger. This transition period is also known as a blackout period. Up until then, you can access your Grey Wolf 401k account at Fidelity and make changes. It's important to note that if you don't want to make any changes before the transfer, you do not need to do anything. During the blackout period, you will not be able to access the Grey Wolf plan. You will also not be able to direct or diversify the assets held in your plan account. For this reason, it's very important that you review and consider the appropriateness of your current investments in light of your inability to direct or diversify those investments during this period. For your long-term retirement security, you should give careful consideration to the importance of a well-balanced and diversified investment portfolio, taking into account all your assets, income, and investments. After the blackout ends, you will receive information on how to access your account. When the Grey Wolf plan transitions from Fidelity to Wells Fargo Institutional Retirement and Trust, your account balance will transfer to new investments in the DBM plan. The next few slides reflect the fund mapping, which was also communicated in the transition newsletter you recently received. If you're satisfied with how your account balances will transfer, no action is required. If you want to change the way your existing balance will transfer to the new investment options, you will need to do that at Fidelity before the blackout period begins. If you have a self-directed brokerage account with Fidelity, those investments will also transfer to Wells Fargo. If you are currently invested in the Fidelity Freedom Target Date funds, they will map over to the Vanguard Target Date Retirement Funds. There are some benefits from the Grey Wolf plan that will carry forward to the DBM plan. This includes the vesting of certain employer contribution accounts, as well as special withdrawal provisions. Any Grey Wolf plan accounts that are 100% vested will continue to be 100% vested. All other Grey Wolf plan accounts will continue to follow a 6-year graded vesting schedule. If you had a balance in the former INCO plan that transferred into the Grey Wolf plan, those balances will continue to follow a 5-year graded vesting schedule, and you will also be 100% vested at age 55 if you have 3 years of service. You may continue to take 59.5 in-service withdrawals from all accounts transferred from the Gray Wolf. Participants in the INCO plan who merged into the Gray Wolf plan will be eligible for early retirement withdrawals at age 55 and 3 years of service from any non-safe harbor and profit-sharing accounts. Making the most of your retirement plan can benefit you now and well into the future. When you reach retirement, you'll look back and be glad that you took full advantage of this opportunity. Let's talk about what the DBM Global 401k plan has to offer. Your DBM Global 401k plan has many features, and here are just a few of the ones we'll talk about today. If you have not yet enrolled in the plan, there's a lot of detailed information online in the plan's summary plan description. After you sign on to your retirement plan account, select the Plan Information tab for all of your plan resources. Gray Wolf employees became eligible to join the DBM plan as of the beginning of this year. You may have been automatically enrolled in the plan at 6% of pay, unless you opted out of the plan or made a different election. You may contribute any percentage to the plan up to $19,500 in 2020. If you're age 50 or older, you may contribute up to $6,500 more in 2020. Beginning October 1st, you may also make Roth contributions into the DBM plan. I'll discuss those next. And you may roll over money from another qualified retirement plan into the DBM plan. Just call the Retirement Service Center for information on how to do a rollover contribution. Let's talk a little bit more about pre-tax and Roth 401k contributions. Both Roth and pre-tax contributions are taken directly out of your paycheck. The primary difference between the two types of contributions is when you pay taxes on them. When you make pre-tax contributions to your retirement plan, you defer a portion of your current pay into the plan on a pre-tax basis, thus reducing your taxable income dollar for dollar, which may lower your income tax bill. Your contributions and earnings have the potential to grow tax deferred until you take a distribution. At that time, withdrawals are considered to be ordinary income, and you pay taxes based on your effective tax rate at the time of the distribution. If you're under age 59 and a half, you may also be subject to a 10% early withdrawal penalty. With Roth contributions to your retirement plan, it's basically the opposite. You choose to contribute a portion of your current pay into the plan on an after-tax basis, meaning you pay current federal and, if applicable, state and local income taxes in the year your Roth contributions are made. Roth contributions, along with your accumulated earnings, can be withdrawn tax-free from your retirement plan if they meet the qualified distribution requirements, meaning you must be at least age 59 and a half, and the account must be in existence for at least 5 years. DBM Global will make contributions to the plan in the form of matching contributions. For every dollar you save in the plan, DBM will match 100% of the first 1% of pay and 50% on the next 5% of pay. So if you contribute at least 6%, DBM will contribute 3.5%. That's extra contributions for you. Vesting refers to your ownership of a benefit from your plan. You're always 100% vested in the money you contribute to the plan and the earnings on that money. You're 100% vested in the DBM employer matching contributions after completing 2 years of service with the company. And your service with Gray Wolf counts in that calculation. Some Gray Wolf participants may have different vesting schedules attributable to the prior employer contributions made by Gray Wolf and INCO. While you're employed at DBM Global, you may qualify to take a loan from the 401k plan and an in-service withdrawal under certain circumstances. Keep in mind that the purpose of your retirement plan is to provide a source of income at retirement. Therefore, you should only access your funds early when necessary. If you leave the company, you have access to your account to take a distribution. Let's talk about the investment options available in the DBM plan. You have two ways to diversify your investments. There are the target date or retirement date funds, which are already diversified across a range of stocks and bonds according to the fund's target date. The second category of investments is single style funds, which are typically all stock, bond, or stable value investments. Let's take a look at these a little more closely. Single style funds are typically all stock, all bond, or all stable value investments. You have a number of funds to choose from within each category, differentiated by the types of companies they invest in, based on size, as well as either growth or value style of investing. If you choose single style funds, you will be responsible for diversifying or spreading out your contributions among the different funds in your plan according to your asset allocation strategy. However, please keep in mind that diversification and asset allocation do not assure or guarantee better performance and cannot eliminate the risk of investment losses. A target date fund can be a convenient way to invest for retirement. The target date represents the year you may be considering withdrawing your money. As the target date approaches, the fund slowly becomes more conservative, with less invested in stocks and more in bonds. As such, the fund's objectives and investment strategies may change over time. Target date funds are typically all-in-one solutions, with the diversification built in. Please keep in mind that diversification does not guarantee profit or protect against loss in declining markets. You should monitor the performance and review the investment objectives and strategy of the target date fund you choose. You may want to consider changing your selection if your retirement date, investment philosophy, risk tolerance, or other circumstances change. The principal value of the fund is not guaranteed at any time, including at the target date. More complete information can be found in the prospectus for the fund. Sign on to your retirement plan account, click on Actions and Investments, then select Research Investments for more information. You have access to a variety of online tools and educational resources related to investing. When you sign on to your account, choose the Action and Investments tab to find prospectuses and quarterly fund fact sheets for the funds in your plan. The fund fact sheets contain key characteristics in a simple-to-read format. In addition, your quarterly retirement plan statements are an excellent way to stay in touch with your plan. Target My Retirement is an investment option available in the DBM 401k plan that offers a customized investment strategy for your retirement savings. Here's how it works. Morningstar Investment Management's investment professionals help you invest and manage your retirement savings. Your information, age, gender, years of retirement, contribution rate, and account balance is used to create a personalized strategy just for you. Diversification is built in, and your asset allocation automatically adjusts as you near retirement. For a more customized strategy, you can provide additional information, such as savings in an IRA or your spouse's or partner's retirement plan, to help create an investment mix especially matched to your unique financial situation. Saving enough for retirement is just as important as selecting the right investments. If you'd like to automatically and gradually increase your contribution rate each year, you can add the Manage Saving feature when you choose Target My Retirement. This feature will increase your contribution rate by 1% each year until you reach the program maximum of 10%. You can cancel this at any time. In addition to your core retirement plan investment options, your plan offers a self-directed brokerage account that allows you to establish a brokerage account within your retirement plan. A self-directed brokerage account is a separate investment account within your plan that offers expanded investment flexibility and control over how you choose to invest your money. So now you understand how important your retirement plan is to your financial future, and you're ready to take action. You can access all of your plan information, including detailed investment information, by visiting the Wells Fargo website or through our mobile app. The site has many resources, tools, and articles related to investing and saving for retirement. If you're a first-time user, choose Enroll at the top of the page to get online access to your retirement account and any other accounts you have with Wells Fargo. If you have other Wells Fargo accounts that you access online, sign on using your existing username and password. On the account summary page, select the name of your retirement plan. If you don't see your retirement plan, click Welcome at the top of the page. Choose Account Settings and then Add Account. Your retirement plan account should be available to add. You can also call our Retirement Service Center and talk to one of our representatives if you have questions about your plan. Here's a reminder of the upcoming key dates that will impact your Gray Wolf account. Familiarize yourself with your new investment options and plan features. If you wish to make changes after the transition period, access your online account or call our retirement service representatives. By planning now with a long-term focus, you can greatly improve your chances of having a fulfilling retirement. Thank you for viewing this presentation.